Hey, welcome back to Everyday Economics. This is the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, publisher of the Center Square. Everyday Economics is brought to you by the Center Square. And to support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, January 24th. And joining me as always, my friend, Dr. Orphe Divounguy, PhD economist. Dr. O, great to be with you.
Pleasure.
Lots going on in the world of economics. We're going to try to mow through the week ahead. Of course, your column every Monday at the Center Square focuses on what to watch in the week ahead, and this week it will be difficult, I think, to avoid. The Federal Reserve will. Chairman Jay Powell will come out. He'll have remarks, and we will have maybe a new interest rate.
No, I mean markets
Maybe,
expect
maybe,
the
maybe.
Fed to stay put, right? To not
Okay.
do anything. With that said, in the last the last dot plot, the last summary of economic projections, basically have core PCE ending the year at 2.5%. PCE also ending the year at 2.5%. Looking at my chart here, PCE core PCE is at 2.8% and moving lower. PCE is at 2.4%, so already below that 2025 target. At the same time, though, the labor market has actually surprised in terms of strength. The Fed really thought the unemployment rate would be ending the year at 4.2%. It ended the year at 4.1%. 4.1%. That's right. And then it expects the unemployment rate to increase over the course of 2025 and get slightly, right? But actually, if you look at the 4-week moving average of insurance claims, unemployment claims, it's actually dropping. It's falling. It's been falling, I want to say, since October 2024. It's been kind of on the downward trajectory. After rising, it was on the rise from April to May to August, right? You look at continued unemployment claims. Continued unemployment rate peaked in November and have been trending down as well. So perhaps, and of course, you got the JOLTS data
Mm-hmm.
that we got for, I believe it was November or December, for November, and the JOLTS data showed actually job openings increasing again. So the question is the labor market actually reaccelerating, right? And even though inflation is easing, uh, pressure on the labor market could essentially lead to pressure on the consumer price side. Um, so far, I think I'm optimistic, and the reason I'm optimistic is because hey, we have strong productivity growth. If we have strong productivity growth, there's no reason why we can't have strong wage growth and not have the kind of price inflation that would cause the Fed to reverse course by raising interest rates again. So I think the Fed will probably pause. They're looking at an inflation number and like, oh, inflation could be heading down. It's heading lower. It could continue to head lower. At the same time, you have a strong labor market, uh, strong but frozen. Right? We've talked about that on the show. You have a strong labor market, but a labor market where workers are not moving to new opportunities because there aren't that many new opportunities, right?
Mm-hmm.
So it's going to be interesting. I think this week we'll probably get a pause as the Fed kind of reverts back to being data dependent and waiting for data, new concrete data to show whether or not inflation's is still moving in the right direction, or they have reasons to be concerned. We're going to get that PCE report at the end of the week. I think that's right. That's one that's going to shake markets, right? If it moves in the right direction, the board will be green and everybody will be happy. If you see a small uptick in the PC index that surprises on the upside, then we're in for really bad Friday.
Well, Yeah, you kind of glossed over the opportunity to talk about what President Trump had said at the World Economic Forum in
Yeah.
Davos regarding interest rates, and that's where I was headed with that. So I've referred to it as interest rate, but it's the Fed fund rate, and President Trump speaking to the group at Davos was pushing for two things, uh, two headline things in my opinion. One would be lower interest rates for business in the United States, and then lower seeking lower oil prices from the OPEC plus partners. So let me ask you this question, because I think that this is going to be on the minds of a lot of Americans this week. What is the relationship between the president of the United States and the president of the Federal Reserve?
Yeah, I mean, yeah, the president appoints the chairman of the Fed, and but but that, I mean, that doesn't really matter. The Fed has a mandate, and the mandate is to bring inflation under control, and bring it back down to target, and keep the labor market healthy, essentially. And so, and of course, financial markets happen to be the other mandate that no one talks about, but very important, right? Financial, making sure that the banking system, not the banking, that the banking system is healthy, right? So when I think when you hear demands like that, hey, I think the president has always made those demands, whether it was in the past, you know, talking about interest rates drop. The point is, it's important for the Fed to remain independent. You can't have 2.8% core inflation. Uh, talk about at the same time talk about wanting inflation to come down and lowering the cost of living for all Americans, while at the same time asking for the Fed to cut interest rates, which could in turn cause inflation to the economy to reheat and inflation to surge, hurting lower income Americans who have been, who basically are constituents who voted for you. I mean, it's not, it doesn't make any sense, right? So I think markets have done the right thing by basically ignoring the what I would consider noise at Davos. From the current administration, it's just noise. That's what it is. It has absolutely it sometimes it has an effect. Sadly, the good news is this time around, it hasn't really affected uh, markets in the way
No,
that we
no,
were afraid it might.
not in any meaningful way. Well, there's going to be a lot to watch. The week ahead will be really interesting. Don't forget to take a look at Dr. Orphe Divoungui's column. That's at the Center Square on Monday, and bring it to an end. So thanks as always, Dr. O. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics, wherever great podcasts are hosted.